Monday morning, folks, and a very warm welcome to this week's edition of the FinMet Mondays podcast. We were on a long hiatus in the month of May, but we're back with a fresh new episode. We saw silver hit spectacular highs this last week, and I'm sure you have a lot to say about that. And maybe that's something that is not really addressed in the markets as to why silver suddenly saw this huge spike. Before we come to silver, what's your commentary on gold markets in terms of the highs that we saw on Monday, the consolidation midweek, and then the follow-up drop that we saw on Friday? What did you make of all of the movement in gold as of last week?
Yeah, it was interesting because since we were talking last month, I think it was about a month ago, gold has now reclaimed over the 3,300 mark. And in May, it was in a period of consolidation and retrenched slightly. But the fact that it's gone straight back up again to where it was about a month ago is based on a number of factors, including the continued trade tariff threats, and Trump put 50% tariff on steel and aluminium last week. So that again puts into the spotlight that these trade tariff issues have not yet been resolved. There was also escalation within Ukraine and Russia with the Ukrainian drones bombing Russian bombers. And that again, I think it was last weekend, was reflected in the price of gold going up on Monday. So gold is still seen as a safe haven for all of these things. And there's continued central bank buying. China came out with another monthly increase in its monetary gold reserves in May, and there's a very strong Chinese ETF demand as well. So all of these things together are continuing to suggest that gold is in a bull market. And what we saw last month was just a small consolidation. And I think that the price of gold will go higher. We're nearly at the end of the first half of the year. And I think into the second half, the gold price will go above 3,500 up to 3,700 or even more. And the consensus on Wall Street and in London investment banks is that that type of price level is attainable. So it was interesting on Monday when the price of gold did go up, and it stayed up slightly around nearly up to 3,350. And it was only on Friday because of higher US job data, which gave an impression that maybe the Fed won't cut interest rates as quickly as possible. So that was just a small tail off on Friday. But I think going into the rest of this month, we're going to see continued strong gold price action above 3,300.
Absolutely. What about silver, Ronan? So that was the talking point of last week. Silver broke through 35. Peter Schiff, in fact, had cautioned 2 weeks back in one Twitter thread that we're very close to silver breaking, and when silver breaks above 35, it will rally up to 50. So he definitely saw this rally coming, and maybe he saw how undervalued silver was. But what was your takeaway from this move in silver last week?
Yeah, I think that for the whole of this year so far, the silver bulls in the market and in general financial markets have been expecting silver to be stronger than it had been. And with gold's rally, it was a little bit surprising that silver didn't follow, because usually silver does follow gold and then in a more leveraged fashion. So sometimes they call it gold on steroids. But there was a few sort of false dawns in the last few months where the silver price did go up above 33, but came back down again near the 30 range. So it was very interesting that on Monday it shot up, and then it continued to go up again on Thursday strongly. And now we see silver at $36. And if you look at the year-to-date performance, gold and silver are nearly neck and neck, with silver like up 25% in US dollar terms so far this year, and gold up 26%. So I think that a lot of uh, institutions that are involved in the silver market, and say COMEX, don't just look at silver, they look at it in comparison to gold. And gold silver ratio, as we were talking about previously, had been up above 100. And that suggests that like the silver price was not as strong as the gold price. But on Monday, when the silver price hit 35, that brought down the gold silver ratio below 100, and now it's down to 92. So I think that the people who look at that ratio saw that it had broken through its own range, and there was a lot of momentum followed with that as well. But if you look at it on a fundamental basis, there's been a persistent multi-year silver supply deficit, and there's huge strong demand in silver for industrial uses for solar panels and also a monetary metal or a semi-monetary metal. So silver is also seen as a safe haven in some regards, as well as in industrial metal. And there's a huge amount of new uses for silver coming out all the time. Yeah, I remember back in 2011 when the silver price did spike up as well, up to near $50. I think it was in late April or early May
Right,
2011. And
right,
again, at that time, it created huge media interest and
correct.
huge investor interest
Right.
to pile in, but it collapsed quite quickly after that. And silver has a tendency to do that. So
Hmm.
it will be interesting to see whether it's sustainable now at 36 and higher. And as Peter Schiff says, if it goes through, now that it's gone through this 36 level, for it to continue, it needs to sustain itself above that in this coming week.
Absolutely. Thanks a lot, Ronan. That was pretty comprehensive, and I think gives our viewers a little bit of an idea as to maybe what could have transpired in the markets. Let's see how the markets play out this week. But till then, thank you so much, and goodbye.